Alright traders, welcome back to the channel. In this video, I will be simplifying market structure for you. I want to show you how to properly delineate your market structure and how to do it correctly. So let's get into the video. Remember, I told you in the first video that every time you want to map your market structure correctly, you want to know where exactly the price movement starts, and then you want to know what market condition you are in currently. So right here I have price coming from this level down to this area and to that level. So this will help you to know your bias. It will help you to know how to correctly trade in the direction of the institutions. All right, so what we have right here is that price has been coming from this level, breaking structure, taking up, breaking structure, taking up, breaking structure, taking up. So let's map out everything right here, starting from this level. All right, starting from this level right here, we see price creating a break of structure. All right, creating a break of structure right at this point. So let's map it out and call it a break of structure to the downside. And then price has been coming down, coming down. The reason why we don't consider this as a proper retracement is that we just have a single candlestick that does not look like a retracement. The retracement started from here. All right, the retracement started from here. We have 1, 2, 3, 4, up to 5 candlesticks taking up. This entire movement is your retracement. If you are considering a retracement, you must consider either a very big candles printing in that particular point. It can be 2, 3, or you can consider an entire movement that you can properly identify so that you will not struggle with knowing whether that is a break of structure or not. All right, so the next thing to do after looking at that is to map out this area, the lowest level that price have printed. You can say that is the level where structure formed, and you bring it to the end. So where the body of the candle closes outside, or this particular one, is where the break of structure happens. So right here, that is where my break of structure happened. All right, so if you're marking your break of structure, this should be the place. So you take it to the next level, which is right at this point, the lowest level that price have printed. As price keeps going down, it will show you that it want to go down because it will keep printing lower lows, lower highs, and it will go on and on. So you take this and map it from here to this level. Did you have a break of structure? Obviously you did. Why? Because you can see the body of this candle closing outside this line. So that is a valid break of structure. It is a valid break of structure because the body of this particular candle closed outside the lowest level. All right, when you draw your line, you're going to see it correctly. So the next low you want to consider is probably this one, right? This is another low that price have printed. Don't worry, as soon as you see this, you will know that price will want to break it, and you will call it a break of structure right here. All right, so that is another break of structure. You should consider this one. Yes, I mean you should consider it because you can see a low forming right here after this break of structure. So that is your break of structure at this point. So you will map it out and call it a break of structure. Moving further, you want to map out the lowest level price came to, which is this point, drag it to the end. That is another lowest level, and price closed outside it. That is a break of structure. All right, you keep going. You look for another low that price created, which is here, bringing it down to this place. Where did you have a break of structure? Is it here? No, not here. It was here where the body of the candle closed outside. Here. Can you see? So that is your break of structure. Now you may be tempted to bring this down to this level because you saw this, but I want you to know something. Once you see an obvious level where you have these struggles around there, just use it as where your lowest structure is, because it is from here that price started coming. This was an attempt to break the structure, and it got rejected. It got rejected. It got rejected until this one that had the break of structure, and then price created another one right here. After that, then we saw price pushing down lower than these at this point. So what do we call this? A break of structure. Now here it is. We have a low, which is right here. We want to see price break it, which is we expect price to come and close below it, but we never saw price coming to close below it. We had a failure swing, which created this movement, and then all of a sudden we have a shift in market structure. You remember, whenever price push above the last lower high that it has created, which is this one, the last lower high, we expect this lower high to push this, but obviously price closed above it. So this is a shifted market structure, and from there, what do we call it? We want to see price keep going upward. So from here is an uptrend. It's fine as far as it keeps going up. We don't want to see price take out the last higher low in this case. All right, so this is it. Price pushed from here. We want to see where price printed the last high. Let's see. All right, we take this guy, we push to the end. Did we see price close above it? No. Do we have a break of structure here? No. How about this one? No. How about this one? No. How about this? No. So that is what you have right there. No breakout structure. The only thing we saw was that price taking out the higher low. Boom. We have a breakout structure there. So we have a shift in structure downside. I wanted to say shift in structure. So we had a shifting structure to the upside, creating an uptrend for the short time we have, and creating another shifting structure to the downside to continue the downward movement. After this, we saw price coming down to this area, and we created another lower high. If we take out this lower high and push up, it means we have actually resumed the uptrend. We wanted to start right here, and that is why we have another one here. The high here has been taken out. Can you see that properly? So that is a market structure shift. Price pushed up to which level? To this high. All right, so we will map out this high and see if price will close above it. This is a retracement because I can see so many candles that push down trying to have price down. All right, so we have a break of structure right there from the highest level, or you can even consider this guy because they are almost at the same level, so that area shouldn't be a confusing matter for you. All right, price keeps pushing up. Let me see if I can bring it to this area. All right, so price push. I wouldn't consider this one as a retracement because it's just like a hold. We have one black candle and just one black candle that has printed, so I wouldn't want to consider this as a proper retracement. It's confusing, I know, but you want to see at least 3 candles that will tell you I want to go down, all right, first, before you consider it to be a retracement. And then you can say it is a high, I want to map out there. But this price has just been rallying up in one place so that you will not get stopped out because of taking trade from there. You want to see something proper like this one, you can consider it. So even this one, you will not consider it to be a retracement. It's not proper because price may end up pushing below your order block or any institutional reference point you're taking trade from. Look at an example here. If you were considering this place to be a retracement, you will say this is a breakout structure, right? And you want to take trade when price comes back to this bullish order block. I want to explain these terms subsequently, but then the problem is that if you are taking trade from here, look at what will happen. Your stop loss is obviously going to be below here, which means you'll be stopped out. All right, so you want to see a proper retracement. You want to see at least 3 candles showing that they want to go down, and then you can further do your trade from there. All right, you can consider this as a retracement. So this is just a short movement as I showed you right here. So that is properly mapped out, so you will not make a mistake in mapping your break of structure, shifting structure. Now we can consider if it is 2 big candles that printed here, let's say a very big candle that you can actually see it push into this area, you can consider it a retracement. It must not be 3. All right, it must not be 3. So the next one is basically this. We saw price pushed. This is a retracement. All right, we have 1, 2, 3. Look at this. It's showing you evidently that I want to go down. So this can be a retracement without any struggle. All right, without any struggle. So after this retracement, do we have another break of structure above the highest level? Yes, we did. So until you see anything, this is a break of structure. All right, this is a break of structure because the body of the candle closed above. You know, that is it. You are watching this, guys. Most people will tell you this is not a break of structure, it is a grab of liquidity. What if price keeps printing the bullish candle up, up, up? So the only thing you want to know to establish that this is a break of structure is when you see price close above it with the body of the candle. All right, anything that happens further, you will later refine it because you are not seeing the future. So you watch price print. All right, okay. So the lowest area that price printed was here when it pushed up here, but now it crashes down and created this higher low. All right, so from here we jumped to here and we couldn't break above here. So we are creating this weakness. Instead of us to create a higher high, we are creating a lower high. All right, but we are not yet in the downtrend until we take out this guy. All right, until we take out this guy. So we want to watch price, boom. Did we take it out? This guy has been taken out. So can we consider this as our shifting structure? We have shifted structure now. So this is a downtrend. It is no longer an uptrend because we've done uptrend and this is a downtrend. We keep going, want to see it. So do we consider this as a retracement? Perfectly. Why? Because we have 1, 2, 3, even up to 4 candles printing upward, telling you that I want to go back. You just need to see this coming in to know that there is a retracement, that there is a fair price balance for you to be able to take trade. All right, so we have a break of structure here right at this point. All right, right at this point. So we keep going down, 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 down. That is what we do when we have this kind of price action. So I know some of you may be confused. Why then did I map out this? Yes, this is qualified to be a retracement because we have one. You can see the candles printing, including this volume imbalance, which I will teach you in the subsequent videos. It can be considered to be a candle right there. So this is a proper retracement. You don't want to worry about that. You want to see some evidence that the sellers or there is a retracement coming in that movement. All right, guys. So I decided to pick this chart so I can explain some of these terms for you. In the training ground, you're going to get further explanation. Thank you for watching. See you in the next video.